All right. Welcome, everybody. Appreciate you jumping on board today. Got an awesome guest, Dan Zitofsky. Dan, I've known for a little while now. He specializes in a variety of things, but mostly in raising private money. And coincidentally enough, I'm getting a lot of questions about that. So I figured who would a better person to have on than Dan Zitofsky. So Dan, appreciate it. Thank you for joining us on this Thursday afternoon. And I guess for our audience and listeners, I guess you could just kind of dive in for those that are not aware who you are, a little bit about your background, how you got involved in real estate.
Sure. Thanks so much for having me on, Ryan. It's always a pleasure to hook up with you and especially help your audience out. So I've been involved in real estate. I'll take the long story and make it a little short if you guys have been involved in real estate. Believe it or not, since before I turned 19 years old, I got my first property, my first rental. And I'm now I'm approaching 50 years old as we're recording this. In June, I'll be 50. So think about how many years that is, 31 plus years now. I can't even believe I'm saying that. But I built up, I was a big transactional guy for many years, fix and flip. And I was doing 30, 40, sometimes 50 properties a year. I was netting $50,000 to $80,000 per property. So imagine I was doing pretty well. I was making multiple seven figures a year doing transactional business. And everything kind of imploded on me, not because of the economy, it's because of my life. I was working probably 100 hours a week. And when I really figured out from my mentors, like, what is my why? Why am I doing this? And I said, because I want to have the lifestyle to do what I want, when I want, where I want. And I wasn't getting that. I was literally transactional to buy boats, cars, watch collection, which I still have, cars I still have. It was all about, filling my ego. So fast forward, I had to learn how to build a passive income portfolio. Otherwise, I was going to lose my life at that point. And that started with rental properties and seller finance notes and becoming a lender as well. So to do that, I knew I couldn't really build that business with hard money lenders or banks. I couldn't count on them because back, if you remember 2007, 8, 9, during the crash, all the hard money lenders started pulling out and all the banks started pulling out at that point. And I got caught holding 11 properties that I had to turn in rentals because banks weren't closing out the deals on the fix and flips. They weren't funding those deals. And hard money lenders started controlling my business. At that point, I still remember I swore to myself, I'll never let a hard money lender or bank control my business ever again. Not to saying I don't use them, but I'll never let them control my business again. And I went on a voyage back then to learn how to raise private money the right way, not begging, not pleading, not crying for the money. I basically just got on it and I said, you know what, I got to learn how to raise private money the right way. Instead of asking for people, I got to have people asking for me. And I just started out on a program and being consistent, putting together things like, my bio, who I was, just content. I became content rich about my projects to the point, and I started teaching people how to use their money to become the bank, how to become the bank. And over time, I got better and better and better at it to the point where, I've personally raised over $30 million in new money and now well over $350 million in velocity in that money. And I got people back in the day that RIA started up and meetups and all that, and they started having me come out and teach people how to raise private money. So I became one of the top coaches on how to raise $1 million more in 90 days or less. Now I'd still do coach one-on-one private money classes to students, and I help them raise private money. And we've had tons of success. And I consistently raise private money without ever asking for money. All right. So I have investors asking me all the time, how did I get involved with our deals? And the most important thing is I could tell your students is if you show your investors, and I always say this, if you could show your investors, educate them on how they could become the bank. A lot of them don't know what they have. They think they don't have money, but they do. And take care of them. When I say take care of them, it's not about interest rates. It's protect them. Your lenders always come first before you do. You'll make your money one day, but your lenders should never lose money in a deal. Now, can they lose money? Absolutely. They have to understand this is a high risk. There's no guarantees. You don't make any promises other than you're going to mitigate their risk. But in doing that, I've built up a pretty nice portfolio. We have a pretty large portfolio now of both rental properties and seller finance notes. So I love passive income. I love to become the bank. It gives me the true flexibility to do what I want, when I want, where I want, anytime I want. And that's why people, when they watch me, they'll see like in the summer, I'm on the beach, I'm on the boat the whole summer. I try not to work in the summer. In the winters, unfortunately, I'm stuck in the Northeast like you, and it's cold out here. Hopefully in the next year or two, I can start getting down to Florida or on a cruise for the winters or Aruba or something. Get out of here for the winters to do what I want to do. But that'll open up as things change in the family. But truly blessed right now, because I get to choose to do what I want to do, right? I get to choose to mentor specific students. When I say specific, I don't take on everybody. I take on certain students. I get to run a small mastermind for investors. I get to do things that I truly love to do. I mean, even we talked about health pre this, I get to coach people on their health now, which I love to do. So I get to really do what I want to do. I don't have to worry about being transactional to cover those expenses that I've created for myself, because every month I'm getting paid no matter what. And if I don't get paid, I have a plan in place to make sure we're protected, and my investors, more importantly, are protected, and their money's always protected. So when you do that, your investors are always asking you, how do they partner with you? How do they get involved in your deals? How can they fund your deals? And once they do, and you do a great job for them, they're not going to anyone else. They're going to stay with you, even for a lower interest rate.
Absolutely. Awesome. No, I appreciate it. I remember you telling me your story at the one event, and obviously it's been a little bit. You look great, man. The health aspect is paying off, so that's pretty cool. Yeah. So just to kind of like rewind a little bit here, some people, nowadays or whatever, a lot of people hear like, oh, no money down deals and seller financing and wholesaling and whatnot. I mean, I can tell you when I started off, it was, flipping short sales same day, didn't really need any money. But as you grow, as you expand to bigger deals or rehabs, et cetera, you're going to need some source of money, right? And a lot of times, a lot of terminology, you mentioned some hard money lending, there's hard money, there's bank money, there's private money. Why don't you kind of dive into, what private money really is and why private money?
Okay. Private money is great because it's hard money is, you come into somebody like me that you don't know, we're raising capital and we're lending it out. We have to come somebody fit in a box, right? For you to be there. When you're dealing private money, it's your I always say this is my program. So when I talk to a potential lender, I'm like, well, let me see if you're a fit for my program, right? Not I'm a fit for you, you're a fit for me, right? My program, I set the rules, okay? I set the terms, I set the conditions, I set the time, and it's a very soft way. We call it soft way to get hard money, right? Hard money, they might have certain credit criteria. They might want you to have certain experience. They might want appraisals. They might only lend a certain percentage, 65 to 70% of the after repair value. Where in private money, you kind of control the shots. And when you have a decent amount, and I say a decent amount, and I'm careful with that because, guys, I've raised a lot of money and I only have 42 active private lenders. Now, they're not all involved in deals at any time, but I don't really need more than that because I don't really have deals for more than that. Now, I always do take on new lenders, but I'm very specific because it's my program. We're going to do things my way. Okay. So private lenders are your friends, your family. They would be business owners, accredited type investors that aren't active real estate investors, right? They're not looking to make that 12 to 20% on their money every year annualized. They're happy making 6 to 8% on their money because it's sitting in the bank. They're getting what, like 0.01% these days. Basically. So when you talk to business owners and professionals and family that have money sitting doing nothing, lazy assets, and you say, listen, if I can help you make better than average returns on your money, would that be of interest to you? And if they say yes, say great. And then you have a conversation and we'll talk about, well, let me see if you're a fit for my program. And then now you have a deal and we speak about this deal and you say, well, on this deal, I could pay out 7% interest and it's 3 to 5 years. And you might not need the money 3 to 5 years. So when the deal closes out, you pay them back and they reinvest the money again. You never want to hold on to their money. You want to always pay them back and close out a deal. And after you pay your lender, I always try to pay the lender, even if they want the money at the end, I try to get them taking money every month. And here's the thing, I always send them, even though we get ACH money, I always try to send them a check, even if it goes to their self-directed IRA or 401k. I always send them a check and with a form so they can submit it to their IRA because it's the psychological thing of getting that mailbox money, right? When you get ACH money, you don't see it as much. When you get that mailbox check, I'll tell you what, after 3 months, you become the hero syndrome to them, right? Everybody has the hero syndrome. Everyone has the best. I got the best plumber. I got the best electrician. I got the best dentist.
Yeah.
When I got this guy, Ryan, who's sending me checks every month and like, whoa, is this a Ponzi scheme or something? Yeah. I'm like, no, he's giving me a mortgage and a note. It's on this property, pays me every month. If he doesn't pay me, I get the property. I got a $200,000 property. I lent him 70 grand. Yeah. What's the worst that happens? He pays me back. He doesn't pay me back. I got this $200,000 property. And then they love singing your praises. Then all of a sudden you start getting referrals. And then now you get picky and choosy who you want to work with. All right. So when that person calls you up and says, I'll work with you, but you're paying me 15%, or we're doing a deal 50-50. Well, now, sorry, that just doesn't work for my program. Once again, my program. That's the difference in private money and hard money. Hard money, they set the terms and that's what it is.
Right.
And they control it. Private money, you set the terms really between the two of you. And most people are going to be very happy to work with you because they trust you, they know you. That's kind of private money.
Right. And also, like, some people listening may say, hey, how about just a bank loan? Well, the issue is with a bank loan, sure, they have 203K loans and whatnot, but a lot of the properties that we're buying typically are distressed. They need a lot of repairs, in which case the bank is not going to give you a traditional loan on. So we have to go either our own money, potentially if you have a HELOC or other line of credit, or your other options, private money, hard money.
Right. And you got to remember, the reason you're able to acquire these assets at the price you're able to acquire them is because you're able to move quickly, cash deal, no inspections, no bank financing. You make the decisions, not the bank. Whereas somebody else comes in and they said, well, they got to have an appraiser come out. They got to have an inspector come out if it's a 203K. Exactly. They got to get approved with their mortgage. They got to have credit approved. Like, we're ready to close. You give me a clear title and I'm closing on your deal. I can close in 24 hours, as fast as the money can get wired. When you give me a title, it's as fast as I can close. So that lends to people wanting to sell you their property, maybe for less money than they can get on the open market, because they don't want headaches. So all we are, and I tell my students this all the time, all we are is problem solvers. We're nothing different than problem solvers. We have the ability to solve the issue at hand for them. And for doing that, we make a profit in doing so, which is nothing wrong with making a profit. We take it out of their hands. They don't have headaches, and we take the headache on ourselves, and we're professionals at what we do. So we're willing to take the headaches on, and we explain this to the sellers, and that's how we get deals. And when I teach how to raise private money, one of the things I teach is how to talk to your lenders. Because one of the questions my lenders used to always ask me is, why would you get the house? Why would they give you the house like this? Or why wouldn't you go to the bank? They don't understand. Like, why are you coming to me and paying when you could just go to the bank and pay 3 or 4%? Why would you pay me 8% of my money or 7% of my money? Why? Like, there's got to be something wrong here. It's too good to be true. Because you got to remember, your private lenders, other than real estate investors, right? That's why I really don't raise money from real estate investors. Your private lenders don't understand this business. So you become the expert. You teach them. You're their, I call it their consigliere in the business, right? You teach them about the business. You open their eyes to how to pay for their kids' college education doing this, how to save on taxes by setting up a solo 401k in a business, how to do a cover dell, right, for the kids' college education, how to use your health savings account to invest tax-free into deals like this to become the bank, right? How to use a Roth. I mean, you're teaching people how to do all this stuff. So you become the expert in their eyes, right? And hard money lenders, they just you have to fit in their box, and they make a decision. And you remember pre-COVID, I remember, man, I could not tell you how many phone calls I got when COVID happened, that everybody needed money, everyone, because all these hard money lenders started changing their terms, their box, and everything like that, you know?
Yeah.
So,
for a little bit there, it was getting a little tight, and then things got a little nuts again.
But I don't like, I mean, it's cool to use them, but I don't like them controlling my business, because at any given moment, like in 2009, we were done. I had 8 properties ready to flip, close out. So I was waiting on those loans for those buyers. And I had 3 properties in contract with $5,000 down each that a hard money lender pulled out on me. I lost that three deals, but the 8 deals I had to take back and just rent them. So we figured out opportunity cost and cash. We lost about $300,000 in over 2 years by doing that. So I swore from that point, I said, I can't build. The difference is hard money lenders, you're going to have the money 6 months to a year. Okay. Private lenders, I always tell them 3 to 5 years, and their money's usually back in less than a year, but I tell them 3 to 5 years. Why? The money's in accounts they generally can't use anyway. Right. And when you deal with somebody with self-directed IRAs, solo 401ks, let's say they're 30 years old. They're not touching that money for almost 30 years. They can't. Right. 59 and a half. So they're with you for that many years, because they can't use the money anyway. So you're truly helping them build mailbox money. And the retirees, you're helping them offset their pensions and their Social Security. Absolutely.
Yeah. Ultimately, you're a steward, and an educator.
Yep. Exactly.
So let me ask you this. There's 2 schools of thought. I kind of believe on both aspects. One is people say, hey, dig the well before you're thirsty. In this situation, obviously raise the money before you have a deal. Then the others say, well, hey, you know what? Get the deal first, the money will follow. I tend to think, I feel on both sides. I think that if you could raise the money, definitely do so. It's good to have access or at least some commitments from people before a deal comes about. On the flip side, you have some people that, maybe more so than the newbies per se, that are just starting off. They don't have the track record. They want to raise the money before the deal, but they don't have maybe, again, that history of doing deals where it's going to be a little tougher for them. In which case, and especially in like a tough market like we're seeing, I feel like, hey, get the deal first, and then the money, the partner, et cetera, will be, easier to follow. What's your thoughts on that?
That's a great question. I believe, and I truly believe, and I still do this, I do both. Do both. First of all, if we're talking to your group and you're mentoring these people, these students, I can guarantee you this: if they say, "Hey, Ryan, I got this deal. I don't have money. Can we work together on it?" You're probably going to say yes, and you're going to, because here's where I would do, guys. And I always say this when people, I didn't have this ability when I started back, in 1990. I started this. I didn't have this ability to do this. There was no social media. There was no Zooms. There was no groups. There was like 3 live events. I remember I went to a Colton Sheets event, a Russ Whitney event, and a Robert Allen event. And I sat in that audience and I was like, man, I'm going to do this. But I didn't have anyone I can go to, right? I didn't have this. But I always say this: stop the whole "can I buy you coffee and pick your brain?" That's disrespectful to somebody with our experience. Absolutely. And it drives me absolutely insane when somebody says that.
That's 2 of us.
It drives me insane. In fact, I take the phone and I just show it to my wife, and every time I don't even answer those messages anymore. It drives me insane. It's just disrespect. That with 30 years, and I'm not saying it to, as Mark would say, impress you to press upon you. With 30 years experience, I'm worth a lot more than a cup of coffee, and half the time you make me pay for the coffee anyway. Okay. What I would tell you to do, implore you to do, is reach out to Ryan and say, "Hey, Ryan, I'm new. I'm one of your students. I'm great at finding deals, but I can't find money. How could I be of value to you and learn?" And this is what I would do. I would say, "Listen, I'm going to bring you a deal. Can you show me how to do this deal? I don't want anything for it. I just want to learn from you." And at the end, you're probably going to, pay them 10, 20, 30, 50%, whatever you decide to pay them. But just to at least do 3 deals, bring some value, right? So there's no excuse right now with the industry the way it is. How many people have experienced the way it is that you could bring something to us? You could say, "Hey, I got this family to have $250,000 in an IRA, but I don't have deals. Can you show me?" Well, now you say, "All right, we'll work together on that." So maybe, right, maybe the next deal I have that I need 250,000. We work together on. You bring the money, I bring the deal. I'll show you how to do everything. We'll do that a couple of times till you're comfortable. So now I get value. My time is valued, and your time you learn. But this way, you're bringing value to the group. That's kind of how I would do it. And I'll tell you why I got like this too. I used to do it all the time. I used to help people for free all the time. I can't tell you one success story from anyone I helped for free. I don't have one. Once I started making people invest in themselves, they valued themselves more. And I learned this from my mentor, right? And I paid a lot of money for mentorship. I was disservicing them by doing it for free, because the minute things got tough, they quit on themselves, right? When they invest in themselves, they value themselves more. They don't quit when things get tough. They figure out a way to get it done. And now they become successful investors. And now somebody who had the ability to become a successful investor now gets there because they didn't quit. If they don't value themselves, they'll never do it. And here's the thing I always realize, and I teach my students the same thing now. I said, if somebody's going to value your information for free, but they're not going to invest in themselves for the same information, how much do they really value you or themselves? So all you do, and because we always had a feeling of guilt by not helping people for free. Sure. But all we're doing is we're disservicing them. We're actually being selfish by doing that. So I know it's a deep thought process to figure that out. But and I got a little on left field with this, but I don't ever believe on it, because I hear that thing too. Well, I don't have deals. I have money. I don't have deals. Well, there's enough people, especially if they're in your group right now, that I'm sure if they brought you a deal, you would probably partner with them on it. Or if they brought you money, you'd probably partner with them on it. But they have to bring you some value. Absolutely. Don't just say, "Hey, Ryan, mentor me free. Show me how to get money. Show me how to get deals," and just do that. That's just bringing no value to you. And you have your time is the one thing you can't get back is time, right? 100%. Time is.
And it's funny you say that, because I just like you, when I hear that, "can I pick your brain?" it's like poison to my brain, man. Just because I'm like, what that means is I just want to extract, right? So I've had these conversations with other people and other interviews. You have to lead with value, right? Like, hey, this is what I could come to the table with. How can I, where's the bottleneck in your business, or how can I provide value? I think that's huge. And the other aspect, it kind of reminds me, I was quote unquote, this is way back, I don't know, 7-8 years ago. I wanted to help people out and kind of mentor them for free or whatever. I had maybe half a dozen people, and I was the one that was trying to motivate them. It was the most bizarre thing, but when things switched, when people pay, they pay attention. And even myself, I invest now more in my own education than I ever have in my life. Right. And it kind of it's a mental kind of thing, right? Like, how much am I worth, right? It never made sense to me how people are like spending tens and thousands of dollars for college tuition to not do shit with it. And then all of a sudden you're like, okay, here's like a multimillionaire doing real estate deals. And I want to learn directly from them how they're doing it, real world stuff. And people are like, that's a scam. It just makes no sense. I don't know.
Mindset. It's all, they live in scarcity and limited beliefs, and they have to fix that. So when I mentor somebody, usually what I do is I go through, it takes me kind of 2-3 months of just mindset coaching with them before they're even ready to start doing real estate, because they live in scarcity, right? They spend their dollar, they'll never get it back. They don't realize it's not a cost, it's an investment in themselves. And they got to value themselves enough. And if they don't value themselves enough, no matter what you or I teach them on how to raise private money, it's not going to help, because there's certain things they need to value themselves on. They need to hold themselves to a certain standard. They need to live in abundance, right? They don't need to live in scarcity. So once they get that fixed, then they can do real. The problem is we teach them real estate, but we never work on their mindset. And same thing with money. People, like, they feel like they have to beg for money because they don't value themselves enough. And if you don't have enough experience, that's why you have the ability to have mentors now. And back then there was no such thing. I couldn't go like nowadays. I mean, you have to do your due diligence on the people you get mentored by, but now there's, tons and tons and tons of mentors out there, because it's so easy with technology these days to be able to mentor people around the world. Where in the past, it used to be you had to do it in person. It was a flight, it was a hotel, it was a pain. Now it's just easy. It's just time, get on a call for an hour once a month with somebody. And, you're going to invest in yourself. If it costs you $20,000, $30,000 a year, that's nothing to invest in yourself, because if you're not making more than that by working with that mentor, it's probably your fault, not the mentor's fault. Probably like you're not doing because you have a bottleneck in your own mindset. And I can tell you this, the people that come to me to learn just how to raise private money, not one-on-one, not lifetime, coaching, not any of that stuff, but one-on-one, how to raise private money in our 8-week training that I do. Every single person I put through it, every single person, and I don't do a lot because I only do 3 every couple months. Every single person I put through has been successful, from raising about $400,000 to one guy now raised over $60 million. And it's probably well over that now. I don't even count that anymore. It's probably over that now. So every person has been successful. Why? It's because they hold themselves at a higher level. They believe themselves. Now, not every person is as professional as the next, but every single student has raised private money and changed their life. Everyone. So now I have other mastermind groups that I do that are a lot cheaper. And, people come in, they don't do the work because they don't value it, because it's not worth the money to them. They don't do as well. It's just, it's not rocket science, guys. You got to invest in yourself. You got to change your mindset. You got to hold yourself accountable. And if you do, there are people that will partner with you all the time, but you got to bring value, right? I know you, Ryan, you're not going to sit there and tell your students, hey, here's a deal and here's money, go do it. I'm going to teach you and I'll take, what do you need them for? And that's what people don't understand. They think because they're your student, you're going to do everything for them. No, what do you need them for? Bring value, show that you're willing to do the work, and then we'll go, I always say it's like basketball. I'll throw you the ball. If you don't throw it back to me, I can't throw you the ball again. I'm not just going to keep going, finding a new ball and throwing it to you. You got to throw it back to me, and then I'll throw you another one. And that's kind of how I coach sports. That's how I coach investors. That's how I coach people in their health right now. And that's how I coach people in their life. And that's how I coach my own children. That's how I've coached them. Like I've raised them the same way. I don't do everything for them. I don't believe in that. Yeah. Believe you have to empower people. And when you empower them, and you're empowered, like just you having your group is empowering people to say, hey, you got me in the group who's done all these deals. I'll help you, but you got to help yourself first. Hey, you want to get healthy? I'll help you, but you got to help yourself first. If you don't commit and your why isn't greater than your biggest excuse, I can't, no matter what I tell you, it's not going to work. But once you put down your guard and you say, okay, Dan, I'm going to listen to you. Whatever you say, I'm going to do. And I'm going to put my ego on the side. Now I can help you.
100%. No, that's great stuff. Great points that you had there. So let me kind of tie a little bit back to maybe more of the beginners that are starting off. Let's say they're actively looking for deals, right? And as we mentioned, hey, if they found a true deal, if it's in my backyard, in my farm area, definitely would be willing to partner with them. I mean, deals are tough to come by in this market right now. But let's say they say, okay, listen, I want to go ahead, start raising private money in parallel. Brand new, no experience whatsoever. How do they go about maybe starting down that path of raising private money? Again, no track record, history, or anything. What would be something that they can go ahead and take and kind of run with?
Well, start living out loud. Get on social. The easiest thing to do is, first of all, never ask for private money on social media. Never publicly ask for money. I know a lot of people do that. Don't do it. It's illegal. I don't care what your friends tell you, what your gurus tell you, it's illegal. When the SEC comes knocking at your door because you don't have the proper regulations, 506 B or C, you're going to have a problem. So don't do that. But you can live out loud. You can go out there and you can show people what you're doing. Like, why should people lend you money? Like, what are you doing? Are you looking at properties? Are you driving for dollars? Are you doing mailers? Are you doing bandit signs? Are you doing phone calls to sellers? Start doing Facebook Lives. Start putting pictures. Start saying, this is what I'm doing. I'm looking for properties in this area. Start showing pictures of properties. Drive around neighborhoods. Walk neighborhoods. Show people what properties look like. Educate people. Get people interested in asking you questions. Okay? That you don't look to start raising money today, right? Look for when you need money in the next 3, 6, 9 months, a year. Start today. All right? Have people ask you questions because they'll watch you on social media. Go to your social media accounts, put in there what you do. Have a great elevator pitch. We teach elevator pitches. Know what a great elevator pitch is. When people ask you what you do, make sure you know exactly what you do. Don't be boring, right?
Yeah.
Like, I ask people what they do all the time. You can't imagine the answers I get when I speak at an event. I'm at an event teaching private money, or I'm speaking at an event. I ask people, I go around with the microphone. I'm like, what do you do? Well, I'm a contractor. All right. What do you do? I'm a real estate investor. Okay. You're boring. You're risky. What do you do? I'm an engineer. Okay. Not one person tells me that they're there to raise private money. Not one. Unless they've heard me speak at an event. What do you do? Tell people I raise capital. To do what? How am I protected? You got to be able to do that in 30 seconds or less. Grab somebody's attention. Okay. So work on yourself, work on your craft. And that's so important. For instance, when people ask me what I do, I said, if they ask my name, Dan Zitofsky, I raise capital, provide better than average returns for my investors, backed by real estate, backed by distressed debt, backed by notes, backed by multifamily, whatever it is I do. Powerful. My name, Dan Zitofsky, I raise private capital to provide my investors better than average returns. I didn't say what I'm giving them, backed by distressed debt from banks. And I shut up. And they ask me questions. Now we have a conversation. Now we take it a little bit further and we say, it's great. We're at a party. I'd love to talk more about that with you. Let me grab your number. Maybe we can grab coffee tomorrow.
Wow, that's powerful. There's a lot of nuggets in there. And I'll tell you, in the past, you hear some people say, hey, come with a theoretical deal to whoever you're talking with. The reality is I've noticed in my own business, right? Just by telling the world, like you're saying, and showing properties, what I'm working on, people are approaching me. People will notice, right? They may not necessarily comment, but they're watching. And so like now I have friends, family members, cousins, etc., that are literally for a couple of years, like begging me to invest with me. I haven't taken their money just yet. And because I treat their money as my own. I'm not just going to throw it at a deal just to put your money to use. I have to treat it as, hey, does this deal make sense? Does it fall in line with what you're looking to accomplish, and then move forward? But I literally have, one cousin that's been trying to, throw money at it for 2 years now. And I'm like, when the right deal comes along, we'll definitely do something. And it's just sitting on the sidelines there. And I never approached him. He just took notice of what I've been doing, sees the rental, sees the flips and stuff like that. So again, like you're saying, hey, if just by putting it out there, they probably will get approached of, listen, if somebody was really busting their butt, so to speak, like there's a local guy driving for dollars and whatnot, and bringing me hey, I have no problem spending a little extra time with him. He's bringing value. He's taking action. And I see that, I believe in him. So, likewise, if someone's taking action, they'll see that. They'll go ahead and they'll feel the confidence maybe putting the, money with them when the right deal comes.
All right. So now your newbie out there, right? A new investor, they just said they have no money. They go out and find a deal. You have your cousin's money sitting there on the sideline. So maybe you use the money for that deal, and that investor learns. Now they make maybe 10, 20% for themselves for instead of picking your brain for free, they go out and do work. You got a checkbook sitting for them. So there's no excuse that they don't have money. Now they build a track record, do 2 or 3 deals with you, and then even say, you know what? I've been mentored by Ryan. He's my mentor. He's done these many deals. Right. Or I got to learn how to raise private money from Dan Zitofsky. He's doing this how many years? I mean, look him up. And you have to make sure that you look people up, you check them out, right? So there's no, like the vice versa, if someone came to you and said, hey, Ryan, I got money, I don't have deals. Well, now maybe the next deal you find, instead of using your cousin's money on yours, use their money on it. That's their value to the deal to learn, right? So they're bringing you value. So right now it's the best time to be in this business, right? And I'm telling you what, if you're not raising private money now, you're going to miss the boat. It's coming. The avalanche is coming. I'm telling you, be cashed up right now. Be ready to go because it's coming. I deal with asset managers at banks. That's my business. I'm a distressed note buyer, an REO buyer from the banks. That's why we raise money. They're telling me how many assets are on the books right now. They're just waiting. They cannot foreclose on them all at the same time, but the avalanche is coming. I'm telling you. And if you don't have private money, you're going to miss. There's going to be a humongous transfer of wealth coming, and you're going to need money to take advantage of it. If you don't have money, you're going to miss it. I missed the boat back then. I was equity rich, cash poor. I could have bought multifamilies at 20 cents on the dollar.
Wow.
20 cents on the dollar back in 2009 and 10. I had no cash. I couldn't raise money. That's why I said, I'm doing this. So back in 2011, I started heavy raising private. I mean, I was raising $400,000 or $500,000 before that, but I was like, man, I'm specific about raising private money the right way, and I stay consistent about it.
Absolutely,
you know?
I agree. I mean, the COVID kind of threw things off, but I felt we were long overdue for a correction. I've been saying that, hey, stack cash, because when we had the last crash, I saw similar, a lot of properties that came by that now are saying, shit, we should have kept that one instead of wholesaling it out. But I'm with you. I think there's gonna be a lot of opportunity.
And if you have private money, you don't need to wholesale things out, right? When I start showing you how to do deals with private money, first of all, you can take that deal, you can turn it into a rental, turn it into a seller finance, sell it to an investor on a note. Yeah. And you can collect more money in passive income and hold that thing for 30 years than wholesaling the thing out for 10, 20, 30, $40,000 one time, right? Yeah. So that's your mindset, going from transactional to passive. And the only way to do that is to have a vision in place. You got to know what your vision is. Why are you in this business? What are you doing this for? And if you're telling me it's for time, well, being a wholesale is not really going to give you the time you need. All right. It's transactional, because if you don't do a deal next month, you have no money coming in. So you got to think about that as well. 100%.
So we addressed, kind of the newer guys with not much of a track record. What about those that are doing a good amount of flips? Experience could be, intermediate, advanced, you name it, ready to kind of start scaling, doing bigger numbers and stuff. We don't have to dive into the granular aspect, but what would their kind of approach be, in a sense? Like, let's say they're talking to a prospect, that's ready to lend some money. What does something like that look like? I mean, are they coming here with like charts and how could they prepare themselves so that, the investor that's potentially going to lend them some money, feels confident with them? I mean, is there, I guess your students, do you tell them about, hey, here's like, I'm just throwing this out there, probably like brochures and the whole, you could dive into that maybe a little bit. See.
Yeah. So you want to put together definitely a bio about yourself and your company, right? And you want to get that, first of all, uploaded in your social media. You want people to see what you're doing. You're never asking for money. Just who you are, what you do, who's on your team. Don't live in scarcity. Make sure you share who's on your team, because we want to know it's not just Ryan that's doing this deal. He's got a team behind him. God forbid something happens to him, who's going to take this deal to fruition. And then you want to start educating people. You want to find your avatar of the best potential lenders you could have. Like I said, I don't really go after real estate investors, because they're not my best avatar of investors. They want to make, they're active. They want to make 20% on their money, and I'm not paying that. So I go after people that are accredited type investors. They could be accredited or accredited type investors. They're smart business people. They're busy in their business. They could be doctors, lawyers, dentists, business owners, self-employed. And I teach them how to pay different things. I'll teach them, how do you pay for your kids' college education, being a lender. And we'll do in-person meetings. We'll do Zoom calls. I talk about investor meetings, how to do those. how to do a brochure. I'll show you my brochure here real quick. It's always sitting here. So I got my brochure, professional, right? Two-sided, frequently asked questions in my brochure. My lenders get that. They get it with my book. So they come to my meetings. I have my book. I have that in my book and an investor questionnaire at every seat. I basically only invite up to a max of 8 people to an investor meeting in person. On Zoom, I kind of do the same thing because it's a little bit more personal. I make it VIP. And then I have 3 meetings with them before. On the 3rd meeting is when I present the deal. So I'll do a group meeting usually up front. If there's nobody shows up, then it becomes a one-on-one meeting. I find out from them what their avatar, what their comfort level is, what their appetite is, how much money they have, where it is, what their goals are, if they want their money monthly, quarterly, at the end, if they're living off their money, what their risk level is. And I always ask them, what happens if I come to you and I say, we lost money on this deal? And I like to look at their face. And I want to make sure that I'm not putting people at high stress and risk if their money gets lost. Because you can't, I see all these people you can't guarantee these. You're not even allowed to. Mm-hmm. But, we can think of every way possible to protect their money. But the bottom line is they're scared to death that they're going to lose their money. If they weren't, they'd give you every penny they had, right? They're scared to death. So you want to make sure you're protecting them. You want to make sure that you're not using their last dollar. You don't want to have them, have a divorce over this with their husband or wife because they did this. And if you do it the right way, you're not going to lose their money, but you got to be open to understanding that. So, and then you present them a deal professionally. All right. There's one, you can do it yourself. There's tons of different software out there that you can present the deal with, but you show you did your due diligence on the deal. You don't just say, hey, can you lend me 50,000 on 123 Main Street? If I have to ask you what the value is, if I have to ask you what the rehab is, if I have to ask you who's doing the work, if I have to ask you what the draw schedule is, if I have to ask you comps, I'm not doing the deal. I'm not doing your due diligence for you, right? It means you didn't do your due diligence. You didn't spend a little bit of time or money doing due diligence to protect me. Why would I do it for you, right? I just have too many other people I can give my money to right now. And that's how every person with money, there's a ton of emails, a ton of social media saying we have deals, a ton of radio ads where people are raising money, a ton of everything out there right now. Tech and media is everything. People can find ways to invest their money. They don't need us. They need to trust you. So when you come as a professional, like when I give this, right, at a meeting, my brochure, right, frequently asked questions, all of the questions that people have asked me before in my brochure. This is exactly what I teach the students I have. When you do that, I look way more professional than anybody else. I could be the biggest idiot out there, but I come off as professional. Okay. Just having a book, it could be, it is a best-selling book. It could be terrible. It's not. And I'm not saying that because it's me. It really is a good book. But it could be terrible, but it lends to an authority, right? Yep. When I present a deal to my lenders, especially ones that never worked with me, I present it professionally. I take a little bit of time and I put it together professionally. And if I can't do it, I'll hire somebody to do it for me. I'll give them all the details, pictures, and let them do it. It's very easy to go to a Fiverr and have somebody prepare it for $100 for you. Sure. Show that you really care about your business, and you'll be shocked how easy it really is. I just can't make any guarantees to you, but if you show a little bit of professionalism and that you really care about your business, you'll never have a problem raising a dollar again. Your biggest problem is going to be finding deals, not finding money.
Mm-hmm. Awesome. Well, I could definitely tell, like most of the listeners, your level of expertise. If we could probably talk for hours on end. I know you got a hard stop in a few minutes. I guess just one last thing is obviously people, listen to this, probably eager to, again, dive in, maybe start raising some money. We kind of touched on it a little bit. Hey, don't post on Facebook. Obviously, don't go advertising on Craigslist. Can you maybe just go briefly, not legal advice, whatever it may be, but some maybe do's and don'ts of those that are, trying to raise money, because there is certain restrictions. You can't just advertise. You have to have certain kind of meeting. I think maybe 3 meetings prior before you even discuss money. Maybe you could dive into that just a little bit, just so any of these guys that are listening don't start blasting, stuff all over the place that can get them in trouble.
Well, real fast, I always tell people, pay the $500-$600 for the hour. Talk to an SEC attorney first before you raise money. That's the first thing, because we're not attorneys. You want to make sure you have an SEC attorney that's going to back you up should you get in trouble. The other thing is, yes, you want to have at least, my rule is 3 meetings at 45 days knowing somebody before I ever present a deal for them to fund. All right. So I have to have a relationship. I document at least 3 times I've met with them. It has to be at least 45 days. That's just me. It protects me. Really, to say about 30 days, but I go 45 days. I don't ever ask for private money on social media, ever. Now, I'll post my deals all day long. I'll talk about my investors. I'll thanks to my investors and lenders for trusting me on this deal and getting, and getting better than average returns on their money. I don't talk about their returns ever publicly, all right, because I don't have to do disclaimers then. I don't ask for money. I don't make any guarantees ever. If somebody guarantees something, you better run, don't walk. So those are the things, but definitely do live out loud. When I say that, show the deals you're doing. Talk about how you're taking care of your investors. Talk about how you're protecting them. Talk about the due diligence you're doing. I'm doing the due diligence on the deal so I can make sure my private lenders are protected when they fund our deals. You could say that. You never ask for money, but do not ask for money. Now, if you truly do want to ask for money, if you do a syndication, you're going to need an SEC attorney anyway. SEC attorneys probably will cost you, depending on the regulation you file, 15 to 30 grand to do that. And you can publicly market if you use the right 506. So you got to make sure whether it's a B or C. And I'm not here to teach syndications. You're definitely I'm not even going to talk about it because you're going to have to talk to an attorney about that. Hire an attorney, treat it like a business. But I imagine most people here are raising one-off deals. They're not doing big syndications. Yep. So let's not even focus on that right now. Just do what I'm saying. Educate people. You could definitely talk about how people can use their IRAs to invest in real estate, how they could use their 401ks, how they could use their children's Coverdell to pay for real estate, right? To get involved in real estate, to pay for the kids' college education. So you could be an educator. You could set up Zoom meetings. You can educate people on how to do that. You can bring experts in, right? So you can bring custodians in from IRA companies and stuff like that. You can bring accountants on, you can bring lawyers on and make them the expert. You just introduce them. And now when you teach people how to use their money to pay for their kids' college education, that's great. Now they set up an account with one of the IRA custodians that you might have a relationship with or not. Now, once they set up the money in the account, they're like, great, Ryan, I have my money in the account. What do I do with it?
Right.
Well, now you're the person they're going to want to fund their deals. So once again, it's not asking for money. I always say give to get. Educate them, help them out, save on taxes, pay for the kids' college, help their spouse, friend, mother retire. Okay. Make money to buy that new Ferrari, whatever it is they want. If you could teach them how to do that without asking for anything, they're going to come back to you and fund your deals. So I hope that helps.
I love it. Hey, a lot of great nuggets there. I wish we had more time. We'll definitely have you on in the future. Before we wrap up, I guess you could just share with, if anyone wants to get in touch with you, how they can do so, if you got any events going on, any other way they could find out more about raising private money, anything you want to share.
Cool. I would love to. Usually when I'm in person, I give this out. So your audience, we give a free cheat sheet. I wrote it myself. It's pretty good. They can go to passivewealthacademy.com/42K, passivewealthacademy.com/42K. We don't sell their names or anything. We just give them a free cheat sheet. It's like our gift for people, listening to us. It'll definitely help them out, especially starting their journey. If they want to, go to my free group on Facebook, don't friend request me personally because I'm at that 5,000 friend limit. I can't accept anymore. Go to Become a Real Estate Investor with Dan Zitofsky. So Become a Real Estate Investor with Dan Zitofsky. We'll accept you in the group. It's a free group. We don't charge anything for that. And I'm also starting to beef up our YouTube page. You can go to Zitofsky Capital Management on YouTube, Zitofsky Capital Management, and get on a YouTube page. We're starting to move our videos over there more and more now, so they stay as legacy. Obviously, in Facebook, we put a video up there and it gets buried. And people keep asking us for it. So we're starting to finally build up that YouTube page because there's a ton of good training on there. That's all free stuff. And like I said, ask questions in the group. You can get in that group. We're allowed to have more than 5,000 people in there. But and love to help you guys out with your questions. Just don't stop. Keep crushing it.
That's awesome. Dan, thanks again. I really appreciate it. Look forward to having you on in the near future. And
thanks so much.
You might have to update the brochure to the new you.
I know, that's what everyone's saying. That's the best thing to do, right? New clothes, new brochure. So thanks so much for having me on.
Awesome, man. Hey, great catching up. We'll be in touch. Thanks again.
You too. Bye-bye.